What is going on, you guys? Q here from Hyperstocks. Today I'm going to do something that I usually don't do. I'm going to be sharing my watch list with you guys in video form rather than I usually do on my Instagram. I found that video form probably will be a little bit more educational towards everybody, so I wanted to share with you guys my setups and why I've chosen the stocks that I've chosen. If you guys do like what you see today, please give us a thumbs up. If you want to see more of these videos, please subscribe to the channel. That way we can help grow everybody's accounts out there and help your trading altogether. Our watch lists at Hyperstocks typically have 8 to 10 setups on them. Our members in the chat usually get the full 10 setups with detailed entry and exit points. Today we're going to be talking about the general charts, we're going to talk about price targets that we have for these stocks, and we're going to give you a little bit of background on the analysis of these companies that we've made and why we've chosen these companies. Typically on the watch list, I avoid low cap cheap stocks only because I like to be invested in stocks that have volume and they have a more of a good company fundamental rather than just perhaps a little bit of price action that's coming in from pump and dumps or maybe just a little bit of news that came out. I always look for companies that have a little bit of reputation around them. That way we know that our money is safe and we're not going to wake up tomorrow and the company is going bankrupt. In terms of hold time, it doesn't really matter how long you hold any of these companies. It just matters that the company stays or the stock stays within the trading range that we create for it. You gotta remember that trading is all a lot about patience, and without patience, you won't be successful only because you need to have patience for your setups to work out. When it comes to slow moving stocks, a lot of people draw away from them only because they want fast results right away. Sometimes you have to wait a week or two for the setup to actually follow through, only because maybe the news is still fresh. Maybe the company's setup is still being created, but it's moving in the right range. So we have to take all those things into factor when we are trading stocks. That way we can be sure to be patient with our setups and not leave them too early when they're about to break out. Before I get started, I just want to let you guys know that everything that we talk about is based purely on my own analysis. So I definitely encourage you guys to do your own research before taking on positions in these companies, because at the end of the day, remember, you're trading at your own risk. Without further ado, you guys, let's go ahead and get started. The first stock on my watch list is going to be BE, or Bloom Energy. If you're not familiar, BE or Bloom Energy is amongst the energy companies out there that are turning away from fossil fuels and transitioning into providing electricity through renewable hydrogen. The company made a strategic move recently as it partnered up with a heavy industry corporation owned by Samsung. Samsung Heavy Industries is a shipbuilding company, and BE's role with them is supplying them fuel cells to power their ships, which will have new requirements by the year of 2030 and 2050. Our world is moving in a very environmentally conscious way as we are realizing that all the fossil fuels that we're burning are beginning to harm us seriously, and we have massive opportunities and investors and day traders to this movement. BE is just one of the many companies that are taking on these actions, and it's definitely one to keep an eye on down the line, but for now we're just short-term trading. Therefore, we're focused on the very near future of the stock, which is spelling a breakout. Let me go ahead and show you why. Anytime I look at a stock, I always try to focus on the bigger picture or the macro picture, in this case the daily candles. BE is a fairly young company on the market. You can see it only IPO'd back in August of 2018. Therefore, it hasn't been around for that long for it to find that sweet spot trading price. So if we look at the shorter term picture, we can see that the stock is creating a large pennant pattern. It's a little bit of an awkward pennant pattern, but you can see that the stock has these random breakouts to the upside, and every time it does so, you can see that the stock is moving in an uptrend. Therefore, we are expecting a big move to the upside from the stock as long as it stays within a healthy range. Now, I've laid out some support and resistance points for you guys, that way you can base your trades off of them. My price target for this stock is going to be $19. So the next company we're going to talk about is going to be called Blink Charging. Blink Charging, if you're not familiar, is an electric vehicle and an electric power station company in which most recently acquired another company by the name of Blue LA. Blue LA is an electric vehicle rental service in Los Angeles that allows customers to rent small-sized electric vehicles to get around town. With the way the world is moving, we know that power stations and electric vehicles are going to be a massive and highly in demand in the future. Therefore, Blink Charging may be in the perfect business. While investments or long-term investments in these companies remain very high risk because we really don't know who the top runners are just yet. Electric vehicles may have been around for quite some time, but they are barely starting to boom across the world. Therefore, investments long-term are still high risk, but we can still definitely make profits on the short-term movements of these stocks, as you can see many people have with this volatility that this chart has had. In terms of the technicals, the stock has had two back-to-back strong green days, in which could follow up next week with even stronger green days, because we have seen a historical pattern from electric vehicle companies in general for them to run when they are in hype, in which they are definitely in hype right now. I've laid out some support and resistance lines to base my trade upon for this stock, and I have a price target for it initially at 9.35, and the next target I have is 9.80. So if this company does indeed keep the momentum through next week, and as long as it stays within the support, then we can call it safe for it to keep moving up eventually to meet our price targets. You gotta remember one thing though, if the stock does break below support, you always need to have an exit plan. So I like to keep stop losses below my supports, and you can play around with the stop loss a little bit. It just depends on your own risk tolerance, but you always want to have an exit plan in case the stock does break below the trading range that you give for it. The next stock we're going to be talking about is going to be called Big 5, and I'm sure you've heard of Big 5. Big 5 is a very large company. It's not a very large cap company, but it is definitely well known across the United States. Big 5 has a lot of short-term upward move, and I see the short-term potential from them only because of the COVID-19 pandemic. After COVID and the gyms closing, many people started to turn away from large gyms because gyms did close. Even when they opened back up, you can see a lot of people are still not comfortable going back to gyms. Therefore, companies like Big 5 are seeing a lot of new customers come to their stores only because they want to pick up those fitness equipment for them to work out at home, which gives Big 5 a very strong upward short-term momentum that may last through the next year or two while people are still getting used to getting back into motion and while COVID is still very much still around. So with that being said, what can we see from Big 5? We can see that the technicals on Big 5 created a strong wedge down pattern in which recently broke out, came back down, and it created a double bottom, and finally it broke out again. So you can see now the stock is trading above that wedge down pattern after breaking out from it, and we want the stock to primarily stay above the 6.50 support. I've laid out some other support lines for myself and whoever is watching this video to perhaps make your trade upon. I am seeing a resistance at $7. The stock is likely going to consolidate between these two price points before trying to make a breakout above $7. I have a price target for the stock of $7.50, and then the second price target is $8.30. Everybody in my chat and everybody in my memberships always asks when is it a right time to take profits, and I always say you always want to take profits when the stock nears the next resistance, because that's a point in which the stock can pivot away from and come back down. So I would like to capture at least some profits, maybe sell half my position at the first resistance or the first price target that I have for the stock, and then I can update my stop loss to a higher position because now the stock has moved higher. Therefore, my stop loss should be higher. That way I can capture profits if the stock does dip too far back. The next stock we're going to be focused on is going to be SPAC, or Spartan Energy. Now, Spartan Energy was on our watch list last week, and the stock did indeed follow through. We had a price target of $17.70 for the stock, and the stock made it to that price point perfectly, and it fell back since. And here's a live example of why it's very important to take prices or to take profits at price targets. You can see that the stock reached all the way to $18 and some change before turning back and falling apart. A lot of traders will get greedy when it comes to price targets, and they expect the stock to push higher and higher. But you don't want to be trapped in that higher move, because the stronger upward move that the stock has and the more vertical it becomes, the more likely it's going to crash right back down. You can see that the stock made it to our $17.70 price target, and it kept moving just a little bit after, but then it fell apart completely and fell back to support. Since then, the stock did bounce back, therefore it is likely going to give us another trade this week. We have another price target for it at $18 and $18.80 based on the current position that it has. The next stock we're going to be talking about is going to be Overstock. Now, Overstock is one of the companies that seriously benefited from the COVID-19 pandemic. As we see markets and as we have looked at markets in the last week, we're starting to see a lot of the stocks that benefited from COVID get picked up again. Therefore, we're seeing the same trend from the market that happened in the initial COVID-19 pandemic lockdown. We're seeing a lot of these companies start to gain again. Biotech companies in which that saw a lot of upward momentum during the COVID-19 pandemic are starting to get picked up again. Therefore, we're seeing a possible or potential trade from Overstock. And another pointer that could lead to an Overstock bullish run is a company called Wayfair. If you look at Wayfair's chart, you can see that on Friday, Wayfair had a massive breakout from a pattern that looks very familiar or very similar to the Overstock stock. So Overstock is in the same field as Wayfair, therefore we can see the stock, because typically stocks in the same sectors do end up moving together because of the momentum and the money flow. Overstock in this case can definitely see that pattern and break out above 77.80 to go to our price target of $80. Next, we have iBio. iBio is one of those breakout plays that you should seriously consider scalping. And if you're not familiar with scalping on the market or getting in and out of a stock quickly, then iBio may not be the best one for you. I'm seeing upward potential from the company at 2.60. So we're looking for a breakout above 260 before we enter the stock, because it is a breakout play. The first price target we have for the stock is going to be $3. The next price target we have is going to be $3.40. Price targets are typically derived of historical patterns, and it's typically a place where the stock had gotten rejected before, or it's a support in which it's broken below. Therefore, we want to take profits at these price targets. The next stock we're going to be talking about is going to be Pins or Pinterest. Pinterest in general is a great company. It's one of my favorite companies to invest in terms of a young company. It's perhaps one of the biggest underdogs in the social media and e-commerce sector. From a user's perspective, Pinterest offers something special for users because it doesn't have the overwhelming algorithm of Facebook or Instagram by showing you all these meaningless things. Pinterest serves the interests of its users without the social media setting where popularity seems to polarize the bigger picture. Many people do not know that Pinterest also allows the ability to buy products right off the app, which is huge in the forward-moving world. I'm personally very bullish on this stock in the long run, but the short term can also give us a very nice play. You can see that the stock is creating a pretty large head and shoulder pattern, and the stock had held up pretty well in comparison to the rest of the market when it got sold off. The market has had a few bad red selling days in the past 2 weeks, and it is dipping below very key levels. Pinterest seems to be holding up just fine, and it is brewing for a breakout. When we look at the picture here, we can see that the stock is trading healthily above the $35 price point and just below the $38 resistance. So we're looking for a breakout over 38. This should be resistance. We're looking for a breakout over 38 to push to our price target of $39 to $40 and eventually going to all-time highs. Pinterest is a slow-moving stock, so you have to be patient with it while you're trading it. Don't expect it to reach great highs quickly, especially due to market conditions. And when markets do sell off, and if they continue to sell off, make sure you have an exit plan in case things go south. Another stock in the same field that we're looking at is going to be Etsy. Now, Etsy is similar to Pinterest, but it operates primarily as an online retailer that has less focus on social media and more about handcrafted products. Now, unfortunately, Etsy stock has been taking a beating in the last few weeks as technology market generally sold off, but there seems to be signs of a potential reversal in the chart, and we may be able to get in on a high-risk trade on this one. If we look at the daily candles, we can see that the stock had two back-to-back strong green days, with Friday having over 26 million in volume, which is a lot more than average on a stock. Something tells me that some kind of news or some kind of announcements coming out for this company, because usually companies that have that much volume increase typically will see some kind of catalyst that gave them this volume. In terms of the short-term candles, we're seeing potential for a reversal on the stock. We really want the stock to stay above the $108 support. Therefore, we can call it in a safe range above that 108 to eventually move up to meet our price target of 116 and our second price target of 120. Now, the next company we're going to be talking about is going to be called Lennar. And if you're not familiar, home buying continues to rise. Through COVID-19, people are buying up homes very quickly and left and right. With that being said, home building companies like Lennar are reaping the benefits and are reporting excellent earnings due to this. Stock analysts have scaled up their positions in this company, and they've also shot up their price targets for the stock's future. In terms of the technicals, the company has been trading just below the $80 resistance for quite some time, and most recently it has shown a lot more volume than usual, especially after the good earnings they posted. The company is very close to testing that $80 resistance for a breakout. Our price target for it is going to be $84 to $85. Last but not least, only because I always like to throw a gold play in all of our watch lists. Not all of them, but when I see their potential, I'm seeing a potential in a company called HL or Hecla Mining. And for the longest time, I thought that was Helka, but I guess I'm wrong. It's Hecla Mining. I'm going to show you something that's very familiar to this chart. I'm going to show you the gold chart. And you can see that the stock, and along with the gold chart, is making a very similar bullish flag pattern that now it's starting to trade at the top of the pattern. With that being said, stocks, like we mentioned earlier, in the same sector will move together and will typically create the same type of pattern. Now, Friday the stock did have a red day, but notice that the stock did close below the 20 but remained above the 10-day moving average, which is really our main focus. Moving averages will act as support points for a stock, therefore it's always a good idea to keep them in your visual. That way you can kind of see where a good exit point for the stock is. A lot of traders are so caught up within the day-to-day movement of a stock that they forget to look at the bigger picture, and sometimes focusing on the bigger picture will tell you a lot more than the smaller picture. You can see the stock is building a beautiful pennant-like bullish flag pattern that it's bound to break out of eventually. Now, as the dollar continues to weaken and people still are putting money in their safety net investment, which is going to be gold, you're seeing these mining companies like HL gain a lot more momentum. You can see just by the short-term history of the chart how much momentum it's gained ever since gold has been on the rise. HL has been on the rise with it, and now it's creating this bullish flag in which it's bound to break out of eventually. Our price target for the stock is going to be 650 and 660 for the second price target. And with that being said, you guys, that concludes our watch list and our video. If you guys liked what you see, please give us a thumbs up. If you guys want to see more videos like this, please subscribe to the channel. And don't forget to follow us on Instagram at Hyperstocks. Thank you so much for checking in.